Hey, good morning, everybody. Hey, welcome to Friday, April 26th. Today, for us here at Statler Financial, is a big day. It's Shred Day for us, our 8th annual, for that fact. And so we're excited to get that event up and going from 10 to 2 today. We'll talk about that a little bit later. And Dave will be with us momentarily, man.
FMI Checks Ambassadors there. We are at 8:30 or 8:38. That's it. 22 before 9. Let's do a quick check on the markets and find out what's going on at Wall Street, because we got a lot of setup going on down at Statler Financial Services. Phillip Statler's on the line, getting ready to do Shredder Day today, right, Phillip?
Yes, sir. We sure are, man. It starts at 10 o'clock. And I'm thinking it's a good thing we moved it up this year because the rain seems to be moving in. But I think we'll get it done before the rain hits here. It's supposed to hit, I think, at 2 o'clock, a little after 2 o'clock.
Absolutely. Alan says most likely rain starts after 1 and most likely after 2. So I'm just going to give you the rocket scientist label for scheduling this at 10 a.m. instead of 1 p.m. because you made that decision months ago, and all of a sudden, how did you know the forecast was going to look like that many months ago, Phillip?
Hey, some days we get lucky.
Such a prognosticator. Here's something that I'll bet none of us guessed, though. Federal government dumped the gross domestic product figure, first reading on the first quarter for us, 3.2%. Boy, we weren't getting indications of that kind of growth rate, were we?
No, sir, we sure won't. And I find it interesting because that headline came from I think CNBC, and they said that they expected GDP to be at 2.5%, and it came at what 3.1, 3.2. So, but the other place that I get a lot of my numbers from expected GDP to come in at 2.1%. So, not sure what those differences were.
Yeah, I was going to say, none of us were expecting anything over 3. I mean, all the figures that we were getting, the guidance from the publicly traded companies, all gave us the picture that we were going to have, certainly not a loss, but we were expecting to see slowing growth. 3.2% is darn near barn burner rate for economic growth. It'll be interesting to see how the revisions come through, won't it?
Yeah, it will. It will definitely be interesting to see how that comes through. I mean, we got 2 more readings after this to determine how what the number really looks like for the first quarter.
Absolutely. But for the moment, the government is kind of saying yeehaw and happy. Boy, yesterday was crapola on the Dow, especially, and primarily on the Dow, thanks to 3M, because they had, according to what I read, the worst day on the market since the crash of '09. And it looks like it's going to happen again with Intel today. So one more time, we always tell people to look at the Standard & Poor's if they want to look at the big stocks, because the Dow really does not give a picture of how the market's doing, does it?
No, it doesn't give an overall view of it because it's 30 companies and it's price weighted. So if one of those companies has a bad day like 3M did yesterday, well, it puts a lot of pressure on the Dow. Of course, likewise, when one of the stocks has a really, really good day, then it bumps the Dow up substantially. So, but you look at an index like the S&P 500, the NASDAQ, there's a lot more stocks in those indexes, and they're capital weighted, not price weighted.
And that makes a big butt difference. Speaking of big things, Amazon was the marquee reporter yesterday afternoon, and I gather they did okay, but they're saying things might be getting a little slower, huh?
Yeah, they did, and they didn't give me exact numbers on the report. They just said that they easily beat analyst expectations with earnings per share, and the company quarterly revenue came in just above expectations. The big deal with Amazon, though, is like you said, it was the slowest level of growth that they've seen since the first quarter of 2015.
Now, we got everything being relative. Amazon is kind of like China. If they don't grow by 10%, everybody's disappointed, right?
Oh, yeah, and they're still they're up 1.75% this morning, so they're still getting a nice bump.
You could do a heck of a lot worse than that, that's for sure. We mentioned Intel in context with the Dow. I gather our big chip maker buddies had a bad quarter, huh?
They did. They reported better than expected earnings for the first quarter, But those numbers are really being overshadowed by, coming out with a weaker forecast for 2019. They're expecting their sales to be a lot lower than expected, and so that's really putting them under a lot of pressure this morning. They're down, man. They're getting down close to 8%, 7.8% right now.
I was going to say they're pretty much toward the top of my big loser list this morning. Intel's an interesting company because they're kind of the next generation IBM. They're the dinosaur of the chip making industry. They're the people that make the chip that's the guts of most of our PCs that are out there, and they're kind of struggling to hang on a market share because, well, how many of us are buying new desktop PCs these days? They aren't getting replaced as often as they used to be.
Well, that's true. People are going to the tablets and using their cell phones for that kind of stuff instead of buying, the bigger desktops and laptops.
Absolutely down the line. We had a couple of other big reports from household names. Goodyear managed to beat the street. They're selling tires, I gather.
I do. You had that one. I don't have that one. I did see that they were going to lay off about 1,000 people due to some streamline in production, though.
Yeah, their unadjusted earnings per share was a loss, and it was better than they expected, but their adjusted earnings per share was up in the positive territory. I'm assuming we're looking at the adjustments, meaning employment adjustments. Did you have the number on Exxon? I had the amount they beat, and they had a pretty good quarter, didn't they?
No,
no,
yeah. I don't know. I saw the headline, but I didn't see any of the details. I've got Ford and Mattel. Ford,
okay.
Their shares jumped more than 7% this morning before the market opened. They beat pretty good. I mean, they were expected to come in like 27 cents a share, and they came in at 44 cents a share. Their truck sales have really boosted them up. Trucks and SUVs in North America really was a big deal for them, and they're still trading up almost 7.5% this morning.
Wow, that's incredible. Other household names that you've got?
Hey, the other one I have is Mattel, which we've talked about off and on over the years, and they. It's always funny when they lose less than what was expected. They lost 12 cents less than what was expected of them. So they're getting a really big boost this morning as we get ready to start the open of the day. They're up almost 7.5% this morning also.
Beating the street sometimes involves not taking as big a bath as you expected, right?
That's right. Absolutely.
Got you covered. So resetting the table for the morning. Yesterday was a day on the broader market. It looked like a bad one because the Dow was down 135 points, basically based upon the perils of 3M. NASDAQ, on the other hand, was up almost 0.25%, just shy of $17. Standard & Poor's basically flat. They were off by $1.08, which is 0.04%. So that's about as flat as you can get without being net zero. 45 minutes early. Which way we heading this morning, Phillip?
Well, since the GDP numbers come out, Dave, we made a pretty big reversal here. The Dow's actually positive, $12. It had been substantially negative before that. S&P 500 is up $4, and the Nasdaq's up $30. And gold and silver, gold's moving basically flat. Silver's up 0.5%, and crude oil. We're going to like this, Dave. They're down 2%. To $63.92 a barrel.
Anytime we're under 64, I'm seeing it as an improvement. Boy, is that relative to where we were. World markets, mixed markets in both Asia and Europe this morning. Phillip, let's talk about the shredder day because we got that big truck coming to meet you in your back parking lot, right?
Yes, sir, we sure do. 10 o'clock, we got them coming in. So looking forward to a lot of folks coming in, getting rid of their stuff that needs to be shredded. From 10 to 2 today. We'll have hot dogs, soft drinks, and the like. And so come visit us. The easiest way to access this is going to be to come in off of Franklin Avenue, cut down the alley by the flea market, and that'll come right behind our office. And you won't be able to miss us because Dave's going to be there with the van.
And I'm real hard to miss. Yeah, by the way, I'm going to have a can there for the Veterans Food Drive. Truth in advertising here. We ran a little short of our goal this year, so this could be your opportunity to help push us closer to our goal as well. So bring some non-perishable food along for the Veterans Food Drive. I'll have the can there ready to have you help out and help a veteran in need today as well. We're going to be on
Absolutely.
the radio.
We'll actually have 2 cans out there today. Let's see if we can fill them both up.
Oh, I'll have a third, then we'll be in good shape. And this weekend, the important stuff on our sister station over on News Talk, right?
That's right. We don't forget to tune in to the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
All righty, and I'll be there to help with the setup within about an hour, all right?
All right, man. Sounds good. Thanks, Dave.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.